Bacon prices up 40% so far this year. Orange prices, juice prices up 12%. Sugar prices up 6%. Grain and wheat prices also higher. What is behind this?
I think we've seen a significant correction in prices through the last couple of years as we've moved away from that bull trend into a bear market. So some form of lift higher in prices is always possible. And as with any sort of agricultural commodity, the biggest driver of risk is always weather. And the biggest shift that we saw earlier this year was the move to this abnormal season drought in Brazil. That certainly affected the outlook for coffee production and also sugar production as well. Combining that with the drought that we've seen in sort of California as well, impacting the outlook for orange juice.
So just to put this into perspective, year on year, the price rises may not seem that extreme. It's just the year-to-date move that is the more significant one.
Yeah, indeed. Definitely for sugar, for the last few years, we've seen a fairly substantial bear trend. And then as well for coffee. Like coffee prices have been in this 3-year bear pattern. And we're finally breaking that out. Prices got down as low as 100 cents a pound. And now what we're really seeing coming through is a shift to sort of higher prices as we're trying to find the equilibrium in the market.
Will that actually feed through to our breakfast table? It's a little bit late for breakfast now, but maybe time for a second breakfast. Will that turn out to be more expensive in the next couple months?
It tends to be that with these sort of patterns, a lot of the absorption of those price hikes goes through the manufacturers before it hits the end consumer. So if we're expecting dramatic increases in prices of the coffee in the coffee store in the near term, it's unlikely to sort of feed directly through in the near term at least.
We've seen a big move higher in the U.S. dollar this week. I would think that makes U.S. corn and wheat less competitive. What does that mean for the U.S. market?
To a certain extent, that's helped. That's helped to reduce the U.S. competitiveness in the world. But having said that, the U.S. is the dominant player in corn at the present, so there's not really too big a shift that's going to go on there. So we would expect that U.S. exports will remain fairly firm for corn in spite of that move. I think our general outlook for prices is that for corn and the grains, they have been in this bull cycle, and the bear cycle is likely to continue for the next few seasons as that surplus rebuilds.
How much of that is down to lower demand coming from China? Everyone talks about base metal, lower demand coming from China. What about grains?
I think from a commodities perspective in general, China is very important for the energies and for the metals. From an agricultural standpoint, though, demand is one of those functions that is very stable through time. It always tends to grow. And this year, we've seen very, very strong demand for agriculture in China. Soybean imports from October through February are up 25% year on year. So showing that strength of food demand and the response that we've seen as prices have come off, Chinese consumption is being able to increase.